how well are you keeping track of everything in your business when it comes to like everything financial.
So what's the worst that can happen? Let's say you're not keeping track of your books. You're just pretty much just, YOLOing.
The IRS comes knocking at your door and they tell you, okay, I want to look at your books. And you tell me you spent $500 on a machine. Where's the proof? How's it going, everyone? Welcome back to another episode of Driven. My name is Alexis.
My name is Juan.
And today's topic is going to be one topic we're kind of, especially because it was tax season, or it's still tax season.
Yes.
But the topic of today's episode is going to be how to manage your money in your business. And this is going to be for beginners, just based on, our experience throughout the years of, like what to do, what not to do, or, like what we should have done differently.
So I have a few questions. So the first question is, like, as a beginner, how important is it to keep, track of your numbers and, keep the financial aspect of your business in good standing? How important is it? As
a beginner, one of the lessons we learned is to separate your business income from your personal business. For example, like if you're going to start a business, open up a new bank account, like just make it fresh, it's 100% fresh, and then start from there, deposit like the money you're going to be spending, like $100, $200, $500. That's going to be your initial investment. And then from there, everything for the business, make sure you go through the business bank account. Because at the moment when you start mixing your business and personal, it's going to be a lot harder to keep track of your money. And as time goes by, you're making more and more money, like because it was the business and the personal money were mixed in. It's just gonna drag on throughout the whole years, and then if you want to go back and correct that issue, it's gonna take a while.
So it's super important because it could affect pretty much the future of of the business of financial.
It can to a certain degree, because I know once you start making more money, then you could just hire a firm or hire someone to actually help you who knows what they're doing.
Right.
So at that point, it just depends on the direction you want to go. Like the easiest direction I would recommend for someone to do is just to separate their business with personal instead of mixing it, and a few years later having to hire someone to fix up.
Yeah, because you're still gonna have to hire someone, and then you're still gonna have to probably go back.
Yeah.
To an extent, and so it's pretty much just you don't want to focus on the on the back end, you can see, of the business. You want to focus on the sales and operations.
Yeah.
Kind of like what brings in the money.
Yeah. And one way of doing that, not really worrying about am I mixing stuff, is just to open up a bank account separately. Start fresh, and just everything that is purchased from the business, make sure it goes through that account.
So as a beginner, is opening a business bank account the only step, or is there anything else that as a beginner people should do?
Definitely, that's an important step, but there's other steps you need to do. I know once you open up a business, a lot of financial institutions, and I know when you go to an accountant to file your business tax forms, they require 3 financial statements. And whenever you take a loan, people are going to look at one of those financial statements. And so those financial statements, all it is the first one is the profit and loss, which tells you, this is how much money I made. And then below that is, this is how much money the business spent. And so you subtract the two, and the difference is your profit.
Mm-hmm.
So that's the P&L. The other one is your balance sheet, which basically tells the condition of the business, the health of the business. This is how much I have in a bank account. This is how much assets I have. If I have some type of machinery, or if I, purchased a vehicle to be able to operate my business, it's going to be in it's going to be in the balance sheet. And, in the case you do want to get an investment or go to the bank, get a loan or something, I know some banks do require that. It's just, okay, if I'm going to loan out to this business, is there something for collateral?
Right.
So I know the balance sheet is also important.
No, but I guess just from the context of it, in your balance sheet, it has your assets and your liabilities.
Exactly. And they have to equal.
Yeah.
And I know it's hard doing it in the beginning, doing it from scratch. I know some people use Excel, but there's you can make a lot of errors.
And so what do you recommend then?
I think one of the easier ones to use for a beginner, even intermediate, is QuickBooks.
Okay.
Yeah, so you could link your bank accounts to QuickBooks, and then you just categorize each transaction, whether it's sales, whether it's money coming in, whether it's expenses. If you want to buy something and you want to treat it as an asset, you could put it there. And so it kind of guides you. You're gonna have to do research on how to operate, but it's that's what many accountants look at. Like, how are your books? So whenever they tell you, like, another business owner or an accountant, how are your books? It's basically like, how well are you keeping track of everything in your business when it comes to like everything financial? So it is important. And I would say start, like any third-party software. It could be QuickBooks, it could be GoDaddy. Start like as soon as possible. Because you like, yeah, it's easier, like updating it every day, spending 5 minutes every day instead of, spending like every week, like an hour.
So it's pretty important, huh?
It's pretty important.
Because, so what's the worst that can happen? Let's say you're not keeping track of your books. You're just pretty much just, YOLOing. And you're just, you're making sales. You're putting it in the bank account, but then you're also spending, but you're not keeping track of anything. I think obviously at the end of the year, you have to do your taxes.
Yeah.
But let's say in the worst case, like if you don't keep track of your books, what happens? Like, why is it that important?
So at the end of the year, it doesn't matter if you're a business or a person, you're gonna have to do your taxes. So if you don't keep track of them, if you just YOLO it, then you're gonna have a hard time telling the IRS, telling the government, okay, I made this much money, this is how much were my expenses, and so this is how much I owe you in taxes. Or like I'm at a loss, like this is how much I was at a loss. So it's definitely like, if you don't keep track of it, whoever you go to, like to help you with your taxes, they're gonna require, like a certain level. They're gonna require that of you. And so if you don't have it, they're going to have to work with you and you're going to spend a lot of money. But definitely, like if you're running a business, you definitely want that. So that's on the legality aspect. The second aspect is because you always want to make sure how well your business is doing.
Right. So it's pretty much on the legal aspect and to see how your business is performing, to see if your sales are doing good, if they're not doing good, if you're spending too much on certain things, So pretty much just seeing how the business is running. Yeah. I think is another important aspect. That's to why you need to track your numbers well, right? And so, I guess as someone starting out, can you go to just step by step? I know you said open a business bank account, then use tracking software, and then where to file their taxes. Because I think that's the progression. Like, so how do you recommend, like, as a new business, like how would you go about it if you could go back and start a new business? How do you go about that?
So if we want to go step by step, step one is open up a separate business account. Like, make sure you don't mix personal and business. That's step two. And then third one, keep track of everything when it comes to, like, if you have to get a third party software, make sure to get that. So like you can have everything in order. And it's not only going to be for the IRS or for the government, it's going to be for yourself to see the health of the business. And then you also, like, one thing is you want to keep records of everything, like receipts of everything you purchase. You want to make sure you keep records of it. Any invoices or, like anything when it comes to like proof of purchase, proof of this was for the business. And that's like, you don't need it to file your taxes, but you need it as proof. If, God forbid, the IRS comes knocking at your door and they tell you, okay, I want to look at your books, and you tell me you spent $500 on a machine, where's the proof? Like, okay. Yeah. So at the moment when you file your taxes, they're gonna take your word. But when it comes like down, like, okay, where's your proof? You need a receipt or an invoice. So yeah, that's pretty much it. In the beginning, and then as you start making more money, definitely I would recommend working with someone who could help you. But that's what I would recommend. 3 to 4 steps is open up your bank account, a separate bank account. Keep business and personal stuff separate. Third one is use a third-party software to help you manage your books. And then the third one, keep invoices and receipts. And so with that was just a quick introduction of how to manage your finances, how to manage your money within your business as a beginner, before even starting your business or just barely starting your business. But if you guys do have any questions, make sure to comment down below. And with that, my name is Alexis.
My name is Juan.
Thank you guys for watching, and we'll see you on the next one.